Hey, it's Soleil, and this is episode 542 of the Orange Pill Investor. Hey, what's up, Grit? Happy New Year to you. Yeah, we're free falling into 2026. And I got to do a little bit of an after action report. It's always a good idea to track your positions. I mean, you can look at your P&L and you kind of know what happened, but it's probably good for everyone, but especially as a new investor, you probably want to keep a spreadsheet or a trade journal and review what positions you took and why. There's an extremely frustrating TradFi guy that was dabbling in options the last couple of years, and he would just be like, "Oh, I made this much, I lost this much," and it would be like, him betting that this stock or that stock's going to go up, and he bought $2,000 worth of options, and sometimes he'd make money and sometimes he wouldn't. And then it was kind of like all of the options that he sold would almost always make money, but then he would be YOLOing into these other options like 30 DTE stuff. And I'm like, and he's complaining about the losses. And I'm thinking, okay, well, you're making all of these things that win and you're making all of these other ones that don't win. So why don't you just stop making those trades? Um, and it would never occur to him to actually stop making the lousy trades. It was always kind of like, oh, well, if I just make the trade this way, or if I just bet that it's going to go up, and I did too much, or I did too little, or I picked the wrong strike. Um, like picking a direction, you really have to know something. You can't just think. You literally have to know with 100% conviction. And that's a part where I struggle. So the option selling, no problem. But then when I saw Quant Bros 1, I was like, holy shit, I'm so bullish on this thing. It just felt like I can bet that it goes up and all of those bets will win. That's just kind of how it felt. And I still have that level of conviction and even more that over a long enough time horizon that this will go up. But I've talked before about giving yourself enough time to be right with these long option plays. And at first I thought, as long as you're doing 6, 9, at least 12 months, maybe a leaps, you've got time to be right. But unfortunately, even a year might not be time to be right. Or you have to be willing to just, even though there's 6 months left on this thing, just get out at that point, right? So a year ago, if you took a position when strategy was at 316 and you bought leaps, you bought 1080s or whatever, then you would be losing this whole time. And then you might be able to exit at a profit here, or maybe even just break even. And it's very difficult not to think, okay, well, this is when we break all-time highs and we got blue sky, price discovery, and it's going to the moon. But if you've spent 50% of your expiration in a position and you're barely able to scrape a break even, that might be that might be time to just I don't know, dump half of that position. So that's something that I need to learn, right? Because at this point, how much time do you have left to be right? You only got 6 months. And so if it doesn't do something amazing in the next 90 days, now you only have 90 days left. And 90 days to expiration is like starting to enter the seller zone. So 6 months to expiration seems like a long time, but it's really not. So that's kind of one lesson learned. But I want to also I wanted to discuss reasons to buy strategy, and it seems like I'm trying to squeeze like 4 episodes into one. But I just walking the dog, I get so many things that I want to talk about sometimes, and it's the last day of the year, so I kind of just slamming them all in. But I made a list of reasons why I invested in strategy, and they are that they are disrupting and they are the clear winner. That was my entire thesis. And it's built on Bitcoin, which is also disrupting and the clear winner. So, we're in a position now where strategy has more Bitcoin than when I was this convicted, when I had this much conviction. And their ratio to their price is more attractive now, meaning more attractive as a buyer. It's not more attractive for anybody who has a higher cost basis than 150. That's not what I mean. What I mean is, does holding or buying more of this position seem more attractive than it did a year ago? Yes. The price is cheaper and they are in a stronger position. So nothing about why I bought strategy has gotten worse, and everything has gotten better. But if you didn't buy strategy for one of these reasons, was it because you thought it would trade like a daily rebalanced 2x ETF, right? MSTX, MST, what's the other one? MSTY is Misty. That's the dividend paying one. MSTX, and anyway, it doesn't freaking matter. But strategy over long periods of time will be correlated with Bitcoin's moves. I think everyone understands that. But there are a lot of people who are confused about why the 1-year Bitcoin chart and the 1-year strategy chart, like, how is it possible that Bitcoin is down 5% and strategy is down 10x? And the reason is because sometimes Bitcoin is up, let's see, from 5 years ago, we were at 33. And then November of 2024, when everything went nuclear for strategy, Bitcoin was up about from 33 to 101. So that's 3 1/3. So it was up about 3x, 3 1/3 x. And 5 years from strategy was up $36 to, after hours, I know it was like $500. So this is like a 15x. So there's going to be times where strategy is going to go nuclear on top of Bitcoin's nuclear, and there will be some outsized gains that are unsustainable. And there are some traders out there, notably, Log Pilot was able to identify, like, hey, I can't remember if it was the way that they implemented the 21 plan too quick, or the MNAV guidance, or whatever. If you're a trader and you have intuition and that works out for you, and you can call some of these tops and some of these bottoms, you can totally increase your win rate, I suppose. However, most of us mortals are just like, for me, this is all I've got, right? And so if I'm willing to hold for a long enough time horizon, Bitcoin's up 200%, strategy's up 300%. So, that's not up 2x. I think that strategy's goal is to 2x what Bitcoin's gains are. Right now it's only up 1.5x Bitcoin's gains. So there are going to be these periods where, if strategy over 5, 10, 20 years, strategy is trying to 2x Bitcoin, and you reach a point where they're 15x Bitcoin's performance, then there's going to be some hangovers that look like this. And if you're a skilled trader and you can dance in and out of these, good on you. However, if you're a long-term investor and your thesis never changes, then you can ignore these, which is very tough to do because for me personally, I buy Bitcoin because I want to be able to escape the country in the middle of the night with my wealth stored in my brain wallet or on a, you know, cold storage device and reconstitute my life in South America somewhere in, if it needs to be. Like this is a sovereign asset. Now, luckily, you can just stack Bitcoin and you can just have it be your savings account too. Like that's not the only thing it's good for. So Bitcoin's good for everything. However, I wanted to retire 5 or 10 years earlier than I would be able to just stacking sats. So I had a selfish desire, and I could have bought IBIT calls. That probably would have worked. Um, there are other ways to get leverage on Bitcoin. You can go to Bitcoin exchanges and do 2, 3, 4, 5x, 50x leverage probably if you wanted to. But when Bitcoin does what Bitcoin does, you can get liquidated with those things. So with strategy, there's no liquidation risk unless the company themselves makes a mistake. And as far as I can tell, none of their Bitcoin is encumbered. So their liquidation risk is as close to zero as it can get. I suppose if we found out that they were committing some kind of fraud or whatever, they could get sued. Um, and if they had to pay $1 bajillion in restitution or something, like maybe, uh, we'd be all asked out and this could go to zero. But a year's worth of underperformance is really, I think, pretty normal. As painful as that is to hear, because if strategy can, 15x Bitcoin's performance over a short-term period, this 12-month period, then it's perfectly reasonable for strategy to 10x the downside. I guess if Bitcoin was down 5% and strategy was down 10% for the year, everybody'd be like, oh, okay, that's fine. It's a 2x levered ETF. But you can't get 15x returns with 2x downside. Eventually this all averages out probably to a 2x return, but this is not, no, there's not, it's not an ETF that's daily rebalancing this shit. So, this is not a reasonable expectation. And so if the yearly price action is causing stomach aches, then some other strategy might be the play. If you bought strategy because you never thought they'd make any mistakes, Sailor's a genius. They know more than us. They know more than the plebs, and they'll just do the right thing all the time, and they're perfect Bitcoiners. That was definitely not the case. I did not like when they came out with the MNAV guidance. I was immediately critical of that because as an options seller, I was like, holy fuck. Now all I got to do is watch the MNAV. If the MNAV is, goes up to 2.5, I can hammer at the money covered calls. And, if somebody with my with my skill level sees that that's an obvious move, then the yield max guys that get paid to do this shit should be able to take that clue too. So as much as people were pissed off that they revised the guidance after like just 2 weeks, that was the only move. I think that was like the best worst case scenario. So I was glad that they revised the guidance and basically kind of put a get out of jail free card for themselves and said, we're going to try to follow this, but in case of emergency, we'll break glass and do whatever the hell we have to do. So I like their transparency, but you can't be so transparent that you let the fucking short sellers and the vultures, um, you can't give them a roadmap or a blueprint to short your fucking stock. Um, and I think that was Josh Mandel's original complaint when he really started shorting the shit out of it in November. Because he just felt like ATMing was giving the shorts too much exit liquidity, which led to a lot of the people being sour and like, oh, let's just lay off the ATM and let the stock run. I think that line of thinking was disproven, because there were periods, there's those blackout periods where they can't even run the common ATM and the price would go down anyway. So, the price can go down without them ATMing. I think there's a better argument that the psychology that the ATM exists might be worse than the ATM itself. How's it go? The fear of death, the fear of death is worse than death itself. So the fact that everyone knows that strategies out there hitting the ATM might be a more psychological problem than however much the price is being suppressed by the ATM, because they're very careful with those algorithms and trying to be undetectable in the market. So, um, but I can't say for sure either way. But yeah, everything they're not going to do is going to be perfect, and the market will punish them for anything that they do wrong. And them being the most transparent, they're probably going to put themselves at risk more than any other company. I have had conversations with people, executives from various companies, and I'm like, hey, you know, I think such and such is important. And they're like, yeah, but if we put ourselves on record, if it's a contentious issue, now you have to put half the market, you have to put yourself against half the market. So, strategy is always going to be a leader in the space. They're going to be the first ones to do things, and sometimes they're going to work out, and sometimes everyone else is going to get the benefit of learning from their mistakes. Kind of like drafting off of a semi on the highway, but they're kind of eating the headwinds for everyone else. If you thought that they would continue their original strategy without deviation, and that the market might need time to digest, if you digest new strategies, that was probably a problem, because they could have just been satisfied with their convertible bond stuff, which technically is ATMing. A lot of people are like, oh, now they have to ATM forever. I'm like, well, they always had to ATM. That's basically what you're agreeing to. So, when I first heard, oh, strategy just got a 0% billion-dollar loan, I'm like, there's no fucking way. You can't loan money for 0%. Like, how do they make money? And of course, I had never even heard of convertible bonds. So now I had to go out there and research what the fuck that is. And yeah, as soon as you figure out what it actually is, you realize, no, this is not an interest-free loan, because the price of strategy, let's just say, was at $200 a share. And now they're going to convert when it's $400 a share. So they're making like 100% profit off of the current share price. But they're making a directional bet that strategy will be able to pump the stock to that level. And if they do, they make their money. And, I don't know what the actual interest rate ends up being, but it's accretive for shareholders because we get the Bitcoin now. The Bitcoin goes up in value. Yes, we have to take the dilution on the back end, but accretive dilution, infinite money glitch, flywheel, all the fucking buzzwords. That shit was all true, but strategy determined that these preferreds were going to be more accretive. I don't think that they liked having to just, spend a month or two fucking beating the bushes, getting deals done, Um, you know, Saylor said that when he grokked Bitcoin and really understood it, he would just lay awake and he was just so panicked that everyone would buy all the Bitcoin before he got a chance. So I think he just didn't like, oh, we can't buy Bitcoin except when we get these convertible bond deals done and we have to make them happy. And then they're kind of like working against the shareholder because they're arbing the fucking vol and, trading around the gamma and hammering the price down, even though they technically want the price to go up. But then at some point they've already arbed all of their upside and they just kind of don't give a shit anymore. So, the convertible bond note holders were not really allies to the common shareholder, I think. So there's a bunch of reasons why they wanted to go to the preferreds. It's much easier now. Anytime that they want to buy some Bitcoin, they just they just press a button, turn the ATM on. They can buy some Bitcoin. Um, so they kind of control their own destiny at this point. But the market liked the convertible bonds. They knew it worked. So now the market has to digest this new thing. And there's going to be some hangover with that. And the company is under leveraged. They can handle way more leverage right now. But it's taking time for these preferreds to mature. So there's this overhang period where they're going from one strategy to another. The new strategy is not mature enough yet to support the amount of leverage that they had on the old strategy, even though eventually the new strategy will probably let them take on even more amplification with no problems whatsoever. And so, even though I'm totally on board with the preferreds, the market is like, prove it. So there's a bunch of overhang with this. Um, and so if you're not prepared for strategy to continue to innovate, because really, we like to say that the strategy has shown everyone the roadmap, right? Semler came out, they tried to run the convertible bond thing. I don't know if Semler just wasn't executing in the same way or didn't have the just didn't have the love for the process in the same way that strategy does, or maybe, you got to have a charismatic guy at the top, and Eric Semler was just like, look, I don't want to be the guy that's on fucking stage day in and day out and, hundreds of podcasts and all that bullshit. Um, being that available to the public is not for everyone. And they tried to grab a hold of some of the big name influencers. I think I think they ended up with Natalie Brunell on the board. And so, it seems like, okay, we think we know how to appeal to retail, but it just didn't it just didn't work in the same way. And to a certain extent, if everyone just copies Strategy's playbook, that's kind of how entrepreneurs work. That's how these venture capitalists work. So if there's profit margin to be had, the free market will attack it. And so if you're just doing what anyone else can do, then when everybody else does it, your profit margins collapse. So you kind of have to be innovating, but in between innovations, you're going to have a hangover. You're going to have a lag in production, waiting for the new thing to kick in. So, eventually, do I think Stretch and all this other shit is their iPhone moment? Probably, but it's where, the market still hasn't decided whether, iPhone or Android is going to win. The market still hasn't decided. So in the short term, we're still trying to figure this out. On the long term, I think the preferreds work out just fine. But unfortunately, that it just led to, basically a lost year. Um, if watched, if you watched us talk about the goddamn, what were they called? We had the whole list of catalysts. We had the whole list of catalysts, and we would knock them down. Every time there would be a new catalyst, we'd go past it, and like, the price was doing okay in 2024, and even better than okay at other times. But it was like, look, we've got this list of like 10 different catalysts. and S&P 500 inclusion was kind of like the boss. That was the boss fight that we were supposed to go through. We won the I guess we had the red sweep, and actually even if the Democrats had won, I'm not so sure that they would have been super duper anti Bitcoin. We might not have got Ross freed or whatever, but I think both parties were warming up to Bitcoin, and that has to happen, right? Look, we know Bitcoin wins, and if Bitcoin wins, then everyone has to capitulate. Both parties have to capitulate. Every country has to capitulate. Every company has to capitulate. Every human being on the planet has to capitulate. The free market does not give a shit. But this was like, we had, I'm sure there was, what is the sites that let you fucking bet on this shit? But it's kind of like, oh, are we going to get S&P 5? I remember the polls. Who thinks we're going to get S&P 500 in Q4 of 2024? Well, we didn't get it in Q4 of 2024. We didn't get it in 2025, in Q1, in Q2, in Q3, and we damn sure ain't going to get it in Q4. So we never, not only did we not beat the boss, we didn't even get the boss fight, because the rating, S&P rating, is so low. No company has ever gotten S&P 500 inclusion with a rating that low. It wasn't like the worst rating you could get. It was just kind of like a teaser, like, oh, okay, we're going to give you this rating, and then we're going to set you up, a bunch of hurdles and hoops to jump through, and eventually, we'll get S&P 500 inclusion. But we never got this. So if this was in your thesis of I need to buy this before S&P 500 inclusion, well, that didn't work out very well. We'll tick that box off at some point, but unfortunately, people who thought they were front running S&P 500 inclusion were front running it way farther than they planned, I think. Or if you thought you were supposed to be tired of winning by now, right? This is kind of, I've had to fight this feeling myself, because I bought strategy because I wanted to get richer faster than Bitcoin would be able to do it. And that worked in November of 2024. But I thought that would just keep working. I was kind of in that 4-year cycle mentality. I didn't believe it, but I also kind of didn't disbelieve it. And I basically traded as if the 4-year cycle was true, which which was a complete train wreck in 2025. And I'm going to talk about that next. The 4-year cycle, it's December 31st. We know that the 4-year cycle failed. And, Dan Hillary was talking about it months ago, how Bitcoin seems to follow more closely to the business cycle. And I don't know if that's absolutely true, or if the power law seems to follow the business cycle by some coincidence, or maybe that's by design. I don't really know. But I was watching, strategy dude sent it to me. What the fuck is his name? He's one of those astrophysicists that podcasts with Giovanni. Let me check my chats. I forget the guy's name.
Bitcoin from 2015 to 2024 won 8 out of 10 years. It was number one in amongst these.
Here we go. Yeah, it was on Bram Canstein's channel, Stephen Perrineau. Yeah, so this was a very good interview, and basically was talking about, and actually, I guess, was it in 2013 or 2015 or 27? Anyway, one of those years, it was already actually didn't really work out. But it's, we got it in 2017, we got it in 2021. And so I'm a guy who likes patterns. like all of the arcade video games that I used to play when I was a kid, I was very good at learning the patterns and being able to kind of juke left and juke right in a rhythm. Wasn't much of a dancer, but I could do that at least. Um, and so when I saw Plan B and it was stock to flow model, like all that stuff really just kind of appealed to me. I really like patterns. I don't know if I have some, uh, not ADHD. What's the other one? What's the one where you have to count shit? Regardless. And so, I like the idea of a power law. I like the idea of some predictable nature, and maybe it's in the protocol because it's just code, and maybe it's just math, and this thing hits every 4 years. But it clearly did not happen this time. We got this stair step in 2024. Um, and then we got an all-time high in 2025, but it just, from the start of the year to the end, ended kind of on a down note. So it's like, is that really a 4-year cycle? It just doesn't seem that way. So what does that mean for the future? Well, real quick, it means that I failed. Like I thought 2025 would, for strategy at least, would pump off of this, and that hasn't happened, right? Bitcoin was just kind of grinding over the last year, up and down, and just basically fell flat. This doesn't seem like a bull market top. And strategy suffered. So my strategy, picking an up direction, completely failed. And so it kind of just feels like, all right, we either had an abbreviated cycle that only lasted like 3.5 years, or we're going to end up with a 5 or 6 year cycle, or more, and the cycle can last as long as it wants. And so I guess I'm going to basically assume that I was a year early. Um, I could just go back to not picking a direction at all, which is what an option seller does for the most part. But if we've been kind of, if we're going to end up this year down, then the bear market is probably at least half over, probably more than half over, if this is a bear market. And if this is just a pause in the bull market, then in either of those scenarios, 2026 and possibly 2027 are bullish. And according to that interview, it was like, hey, the power law says that this could end up really pumping end of 2026 up to what, like Mayish of 2027. And how does that correlate to what we know about Bitcoin anyway? It's going up forever, Laura, right? So you can betting that it goes up can only be wrong for so long. And nobody has ever made that bet for 4 years and hodled for 4 years and lost money. So, the fact that we've already spent a year down in 2025 means that it doesn't really seem like this could continue for another year or two, right? To think that we would have to wait until 2029 for another all-time high seems kind of ridiculous, when the amount of deflation that AI and tech is injecting into the economy, and the amount of insane money printing that they're going to have to do to hide that deflation and and erase all of the deflation and make sure that inflation remains at like 2%. Um, they're usually like, oh, how low can we lower the rates so that we don't see inflation? And at this point, it's going to be more like, fuck, how low can we lower the rates just to keep just to keep deflation above negative, just to keep deflation from going negative. Now, that doesn't mean that your ground beef won't get more expensive. Um, but, the cost of labor is going to absolutely plummet. And maybe the cost of labor for beef farmers doesn't go down because they can't outsource things to AI. So the things that we need to keep us alive will probably continue to get more expensive. Um, Actually, maybe not. We're going to be able to print animal proteins with yeast in the same way that we make insulin eventually. So hopefully I'll still be buying, hamburger and ribeyes, and maybe the third world shithole countries will be the ones eating the fucking printed animal meat. But it's still it's still going to be a hell of a lot more healthy than the fucking grains covered in glyphosate. So even though there's still going to be wealth disparities, I'm still hopeful for the future that even the most impoverished people on the planet are going to be able to get enough protein in their freaking diet over the next 10, 20 years. What else? Let's check the chats real quick. Damn, I've been ignoring the chats like a mofo. What's up, Buffalo? What's up, Voyager? All right, Grit says, I consider it as a construction project. Common funds it until press can do the job. Does it suck currently? Yes, but every single metric is stronger than this time last year, except for the price. That's exactly the way I see it. AB says 2026 will be interesting. Everything is in either Bitcoin, IBIT, strategy, Strive, Stretch, SATA, or Tesla. Consolidated everything over the past year. Yeah, I can't find too much fault in any of those positions. So, strategy dude, investing in Bitcoin, let alone strategy, is not for everyone. I believe you fundamentally need a long term view, at least 4+ years. Otherwise, it's probably not for you. Wise words. AB says the press make this hard to anticipate. What happens when the NQ dips and stretch pegs to 100 for an extended period of time? Yeah, that's the money shot right there. Is when they can just hammer stretch and it never dips below 100. When that happens, or if and when that happens, I can't wait to see all those orange dots and no common ATM except when they have to pay the dividends. They had to revise. They got the call from the big guys. Yeah, yeah. It wasn't the call from me, but it was probably the call from somebody. Buffalo says Sailor did say recently that they exhausted the convert market. Really? Meaning nobody's lining up for deals anymore, or that they had taken all the money that was there and there wasn't enough deals for everyone left over for everybody else. Let's see. AB says, I think Semler had the conviction to try, but didn't have the execution. Excited to see how Semler free cash flow sets up Strive. Cashflow's been a hang up in the space. This was a setup year, to be honest. FASB prefs, USD reserve, mild autism. Yeah, I think. What is it when? Yeah, what is it when you see somebody and they have to separate their foods? Like, oh, okay, I have to put all the green foods over here and the orange foods over here, and I have to separate my fucking Fruit Loops into colors and shit. Um, it's not ADD or ADHD. Compulsive. Yeah, OCD. That's what it is. Um, all right. What else did I want to talk about? Okay, so what does that mean for this year? I think I'm just gonna reboot it. I'm gonna reboot 2025 and play it with a similar philosophy, but I'm gonna be a little bit more strategic with my net theta. So there were periods during 2025 when I had like 20, 34, 40 lots of frickin' these guys, frickin' 1080s. And the theta drag on this account brought my net theta negative. And so I have to be strategic and not let that happen. You know, regardless of what happens to the price, I have to have positive theta here, meaning more money is draining into the short positions than is draining out of the long positions. And I guess I have to be careful how I say that because some guy skewered me on YouTube and was like, I had said something like, you know, I need to structure these positions so that more money is draining into my account than out of it. And the guy was like, yeah, okay, genius. Of course you want more money draining into your portfolio than out. But I didn't mean that, like, I want to win more positions than I lose. I literally mean theta decay should outweigh, you know, my reverse theta decay should outweigh my actual theta decay on my leaps. So hopefully I said that in a way that makes sense. So like this poor man's covered call. I bought the I bought the 200 and I'm selling the 220. I'm so upside down on this that this is actually a drain on my account. This is actually more um this is more of a directional upside play than an actual theta play. But when I set this up to begin with, it looked more like this. This is what I need to make sure I concentrate on. So the net theta for this grouped position is positive. I'm losing $5 a day, but I'm gaining $12 a day. This caps my upside at strategy going above 190, but regardless of whether strategy goes horizontal for the next 50 years, this position would make money. Now, if it goes down, this position loses money. It is directionally up, but it has a capped upside at 190. But if we stay anywhere between 150 and 190, this will print some small amount of money. Um, these losing positions that I highlighted, I only have to hold on to, you know, see this losing position for another about 45 days. I'll dump it. And this one, unfortunately, if I only had that one over for 60 days. Yeah, I may have to reboot these too. Well, huh. This one's got so much time left on the leaps. I kind of feel like I'm not absolutely calling the absolute bottom. There could be a bunch of people who did their tax loss harvesting in the last, you know, week. They won't be able to repurchase their strategy without violating the wash sale rule for another 30 days. Could people have been proactive and they were anticipating buying strategy back on January 2nd and they were dumping their strategy at a loss back on December 1st, and then, you know, January 2nd they can buy it back and not get hit with the wash sale rule? Maybe. But I suspect there's going to be a bunch of people who waited, you know, between the 15th and the 31st that have to wait until January 15th, January 20th, January 31st, maybe even February 1st before they can buy back in and not get hit with the wash sale rule. So I don't know that people that sold for taxes will be aping back into the stock on January 2nd. You know, so it could take a month before this really starts to make some noise. Um, and then if the elites want to pump the stock market before the midterms, they probably got to do that 6 months before November. So really, they wouldn't have to really start printing money until May. But supposedly quantitative tightening is over, quantitative easing has begun. There's some rumors that the gold and silver might be blowing up short positions, and maybe the Fed will have to step in and print because of that. I don't really know. Larry Lepard seemed to think that was the case. I've been watching some of his tweets. So we may get the big print after all. But bottom line is, either this has been a bear market in 2025 and that year has soaked up most of it, and we'll be on to a bull market in the next year or so, or this was just kind of like, I don't know, you can call it a bear trap or whatever, and it was just kind of a lull in the action before everything just really ramps up with the money printing, treasury company adoption, government, world government adoption, and we were just a bit early on calling for Godzilla candles. So I guess it's the TLDR version is, I'm not going to change anything other than the ratio. So I'm still as bullish as ever on Bitcoin, on strategy. I think all of the macro still points to a fuck ton of money printing, and I'm not YOLOing 100% of my portfolio into 1080s. It will be a measured play instead of an irresponsibly long play. It'll be irresponsibly long. That's what we'll call it that. With that being said, I'm not inclined to roll anything down today, because if people were planning ahead and they sold at the beginning of December and they want to buy back on Friday, I don't necessarily want to roll these positions down. But there's like there's such a small profit to be had between now and Friday. There's no point in me keeping these on. Like, there's no premium here. So I'm just going to close these. Let me reshare without volume. All right, there's not enough premium here to make this worth keeping. I'm limiting my upside to capture like nothing. $190. So I'm limiting the upside on 1,100 shares, or 1,000 shares, just to collect not much. So I'm just going to hold this, and then if, on January 2nd, the price could dump, but if it does, I'll only have lost $180, right? I'm not gaining or losing much of anything. And, if this price pumps on January 2nd for some reason on low liquidity on a holiday day, that's fine too. Otherwise, I'll just put these positions back on Friday for next week. Let me see what I could get for Friday. I mean, rolling down to just super aggressive 157 strikes, I could get $100. So it's just not worth. It's not worth taking the chance. You have to be careful around binary events. The tax year is not like one of those binary events that we normally think about. We usually think about earnings dates as binary events. Things like Tesla, like Battery Day, Investor Day, things like that. Those are binary events. Job reports, Fed announcements, Fed meetings, those are all binary events. But trading around your taxes is technically a binary event as well. So I don't mind taking this position off just over New Year's. Not losing much of anything. Yeah, if I did put the 157.50s on, I could collect about $1,000. And then if the price dropped, then I'd have that $1,000 cushion. But in the grand scheme of things, I don't think that's worth much. They did move all the positions that I asked them to move, but they didn't move any of these one lots of these shit companies out. So that's kind of annoying. But let me look at Tesla and Cypher. I got to email them and see if they're going to move that shit back. Oh, so I talked about Carl Dom, the real P&L guy who inspired me to trade this with transparency. And I think my P&L for the year 2025 was down 40%. Um, I thought it was going to be worse than that, but I think the account was down a little bit in November, excuse me, in 2024 from the November blow off. So, where's January? Yeah, it crashed from November from 500 a share to, yeah, it lost about 25% here. So, technically, a bunch of that money that I made in 2024, a bunch of that peeled off in just the 2 weeks at the end of 2024. And then it, kind of bounced around in there. Fortunately, the gains from 2024, still up in the long run. But 2025 was pretty brutal. All right, anything to do with Tesla? I'm going to wait on this one, even though it's getting kind of close to rolling. I'd have to roll it to the 44 DTE. Actually, the liquidity here is not bad. But damn, they don't even have the strikes over 530, which is fine because it's pretty close to the expected move. Anyway, actually, the liquidity here is not bad. Maybe I will place this trade. This has only been on for 5 days, but Tesla's been kind of, is it down a little bit? No, it's not quite ready. If this was under 550, yeah, I'll hold off on that. And then next week I'll just roll it out to 45, and the whatever 51 will be 45 next week. I'll be picking up on some bullish directional positions in Tesla as well. Cypher. This position has been on. Oh, it's saying 0 days open because I guess it reset. It reset this number when it moved it from my other account to this one. That's dumb. It didn't remember how long I've had this on, because I've definitely had this on for 3 weeks and it's finally break even. Let's see, what rolling expiration. The liquidity here sucks ass. I'm gonna wait another week. This is kind of what I'm talking about with sometimes when this new week comes out, there's just not much trading being done on it. So I'll wait till next week and roll out to 45 days, maybe next Monday or Tuesday. Same here. I don't want to roll out to the new expiration date. Liquidity sucks ass. And same. All right, the IRA. Tesla. And actually, that account that I was just looking at might be frozen because they still have to move those one lots. So I might not even be able to take a position until next week, till they get everything moved around. They did send me an email that that account is frozen while they're moving things. Hmm. Yeah, see, I can't roll to the expected move for a credit. I could go to 500 for a teeny tiny credit. Hmm. So Tasty Trade recommends rolling this somewhere between 21 and 25 DTE at the latest because gamma risk starts to become a problem under this time frame. I generally don't mind it too much, but I have already captured almost half of the original uh, premium. So yeah, I can roll up from the 465 strike to the 500 and capture a tiny bit of premium here. So it's going to give me more call away value and a tiny, tiny bit of premium. This isn't capturing as much premium as I would prefer, but Tesla might be more valuable on with the upside actually than pure premium generation. So there's only $9 left in this position, but prorated out over a week, this is like not bad. Actually, this is the iron. This is not cipher. So yeah, that's probably not worth much. Let's roll this down. Let's roll it to the expected move. It's not capturing anything terribly exciting, but just a little bit of a tweak. Could I get wrecked if the market pumps on Friday? Yes. But no biggie. Looks like I'll be taking possession of another 100 shares because this will get assigned over the weekend. Unless something crazy happens with the price, which will be fine. Still a decent amount of premium left here. This is the one I just rolled, right? Yeah. Strategery. This is technically ready to roll, but I didn't like the liquidity on the February 13th stuff. I could nab a little small credit here, but I think I'll just stand pat until further notice. This poor man's cover call is still set up okay. So I'll probably roll that next week. All right, this is my free for all account. This is the one. This is the one I took the most risk in. This one's probably down like 90% in 2025. But this was just all lottery ticket money, and none of the scratchers paid off. Yeah, I'll roll all this stuff next week. Cypher, I mean, I could roll this down to the 16 strike for an extra nickel or something, but I'd have to pay the bid ask spread to get in and out of this and then do it again on Friday. So this is kind of not really worth me losing $1 by rolling the position. Probably $2 rolling $1 to get in and rolling $1 to, or excuse me, to close it and get out and then open the new one. Might get assigned another. Well, we'll see. If Cypher's still down on the 23rd, might end up getting assigned here. Copy trade this one with my brother-in-law. Same with this IBIT call. I'm going to wait until. Wait, did I sell this for 40? So IBIT options probably have a lot more liquidity. Let's see if I can roll this out to 45 for anything. At the same strike, basically. Oh, I can't even get. Oh, that sucks. Okay, so I probably will have to roll out to the other one next week because I got to stay above the 59.50 strike in order to make this even make sense. Yeah, there's more strikes available. So I'd rather roll to the 60 on the 20th than the 55 strike on the 13th. So that'll be next week, aka next year. Yeah, a bunch of other long-term bullshit that doesn't. I don't need to do anything but sit and look at and stare at them. Bungled my tax loss harvesting by buying in my HSA and IRA on December 1st. Wait, how does that mess you up by buying in my IRA on December 1st? Wait, did they cross? They don't cross reference your IRA with your taxable accounts, do they? What's up, Speed? Finally catching you live. Thanks for all that you do, and Happy New Year. Happy New Year to you as well. I hope you had a great holiday. Yeah, I think that's it. Um, when you look back on your trades and you're looking for wins and losses, you can do the wrong thing and win, and you can do the right thing and lose. So in this scenario, I'm just gonna say that uh, I don't think there was anything mechanically wrong with the trades. It literally just the direction was wrong. As a pure option seller, you really don't chase direction. And so since I decided to chase upside and lost, it just didn't work out. But if Bitcoin's going up forever, then that means strategy is going up forever. So if you're directionally up and to the right, you should be able to, as long as you don't run out of money, as long as you don't get liquidated and run out of money, as long as you keep your position sizing to the point where you never go flat busted, then eventually, you know, being bulls in Bitcoin and Bitcoin derivatives should win. So it didn't work this year, but 2026, 2027, it seems like everything is lining up for a good year. So looking forward to it. Looking forward to hanging out with y'all online, but also in person. I will see any of y'all that show up to Strategy World in February. That's going to be fun. And then I'm sure we'll be doing something. And hopefully I'll get to hang out with y'all at some Bitcoin conferences. I think Bitcoin Veterans is going to be Vegas next year as well. And you don't actually have to be a veteran to go. I know there were some veterans in the audience, or excuse me, there were some civilians in the audience and some civilians on stage that were presenting. So if anybody wants to attend, and or if you speak at these conferences and you want to speak at the veterans one, it's not vet only. It's just put on by veterans, and there's going to be there's always going to be a bunch of vets there. I thought there was a really good session on fifth generation warfare, which applies to everyone. You don't have to be like some kind of military historian or anything to appreciate that. So, and then the second day of the conference was actually a range day. They knew a guy local who had a like a bunch of land, and we actually went out and shot on his property. There were some excellent range officers there that gave a bunch of helpful hints for shooting. I don't know if there will be a range day at the next one, but man, it was a hell of a lot of fun. Um, but I gotta get overseas. I'm gonna make it my damnedest to get to Canada. Ben Schmidt is involved in a conference in Canada, and I was supposed to go, but we had some emergencies come up, and I had to back out of that one. But I'm gonna try real hard to get to Canada in 2026. Um, I was just seething with jealousy when people are posting from frickin' uh, China and friggin' Prague and UAE and just all of these cool places. And got to get out to some of those places, but also some local stuff. I was gonna try to put something local together in the Baltimore area in 2025, and then when the weather turned to shit, I just procrastinated way too long, and maybe the vibes got to me a little bit too. But it would be kind of cool to do something, especially when it gets a little bit warmer. I don't know if anybody plays um, disc golf or anything like that. I don't really play um, seriously, but my son-in-law got me into it a little bit, and there's a couple of courses around here that might be fun. Bring some mosquito spray and have some fun with that, and then of course meet somewhere for drinks. Maybe there are a couple of casinos around here as well. I don't know if there's any card players. I wonder if we could arrange a card tournament and sit around and play cards and talk about Bitcoin and shit. That might be fun. All right, cool. Appreciate everybody for tuning in. I look forward to hanging out with y'all more in 2026.